Strategy for large corporation. With us is Mr. Simon Connell, Global Head of Sustainability Strategy, Standard Chartered Bank, Chair, Net Zero Banking Alliance, in conversation with Amine, Benayad, Managing Director and Partner of BGG. Gentlemen, thank you for being with us. I pass the floor to you for your fireside chat. Thank you.
Thank you very much for having us, and good evening, everyone. Today, with COP26 just behind us, 90% of the world is now committed to net zero. Rules are being put in place. Disclosures requirements are increasing, and more pledges to reduce emissions are coming both from the public and the private sector. Yet, for many corporations, the question remains, what does the path to net zero look like for me, and how do I go into that journey? So I'm very happy to discuss this challenging topic with someone who is at the forefront of this effort, Simon Connell, the Global Head of Sustainability Strategy for Standard Chartered Bank, a bank spearheading the race to net zero. Simon has over a decade of experience of sustainability in the finance sector. He is also the operational chair of the Net Zero Banking Alliance, the UN's body that brings together banks, almost 100 banks representing over 40% of global banking assets, and which are committed to aligning their lending and investment portfolios with net zero emissions by 2050. As part of its commitment to sustainable finance, Standard Chartered recently took the decision to stop financing all new coal-fired power plants and to measure, manage, and ultimately reduce the aggregate CO2 emissions, equivalent ones also, from its financing activities. Simon, welcome. It's a great honor to have you with us today.
Thank you, Amine. It's a privilege to be with everyone today. And in particular, as we think about the journey to net zero being one that is a race in which we're all participants, it's a pleasure to be in such an esteemed company, and in particular, the public and private sector dialogue that today represents. It's much of what we need as we try to solve for net zero, let alone wider societal challenges.
Thanks, Simon. So indeed, policies need to show willingness or to encourage the flow of capital to corporations who are willing to drive down their own emissions. It's also important that all sectors of the economy set targets and strive to achieve them. So the question for you, given your experience and position, Simon, is what role can the financial sector at large, and banks in particular, play in driving down emissions?
Thank you. From my perspective, there's a few key roles we may play. The first is a signaling effect. Standard Chartered and other members of the Net Zero Banking Alliance committing to achieve net zero financed emissions, and in so doing, acknowledging that we're setting targets on things we don't fully control. Our financed emissions are the operating emissions of the clients and counterparties who we serve and who we do business with on a daily basis. Now, having said that, that then gives us a few challenges. The first is, how do we understand where each client is on their decarbonization journey today? And that it's really helpful to understand clients' emissions, clients' transition plans, and to think about those in context of things like the Task Force on Climate-Related Financial Disclosures. So the finance sector encouraging that data, that information to flow. The purpose of that data and that information is for us to understand how clients are thinking, and particularly as a provider of capital, to understand what their capital needs are in the transition. We've done a lot of research over the years about the availability of capital, and particularly in many of our footprint markets, as little as 10% of the capital needed to support a sustainable transition towards net zero is occurring at the moment. So we want to play a significant role in unblocking that, in providing capital ourselves, but catalyzing capital from others, including through structures such as blended finance. But it's not just about the capital. It's not just about the signaling effect. I think the third and most important part is then to work closely with our clients. As part of our net zero roadmap, we've released a transition finance framework. This thinks about and describes the economic activities across a range of sectors that we think are needed to get towards net zero. And we've done that in partnership with you, Amine, of course, at BCG. We couldn't have done that alone. But again, that is designed to help support client conversations on their journey, on how that can be accelerated, and the role that Standard Chartered can play, whether in providing finance or in providing expertise. Because in all of this, as I spoke to a moment ago, it's a collective endeavor. We can send those signals, but we need to work with others to achieve the targets we set. They're outside of our control.
Thank you, Simon. Very clear. You talked about corporations setting targets and commitments, and banks themselves have made net zero commitments in recent years, and we've seen a great acceleration in the recent months, acknowledging their pivotal role in the climate transition. From your perspective, what are the main risks and challenges involved for banks?
So I was really impressed to hear in the prior section that Cisco, as one example, has been targeting this since 2008, because necessarily the transition is a long-term imperative. It is longer than the tenure of any individual CEO. It's longer than the tenure of many individuals within the corporate sector. And so I think this does introduce those risks that I just spoke to, that mean that although we set the targets and we might have some levers, ultimately these goals are not our goals alone to control. And so some of the challenges we might experience there are forcing activities outside of the mainstream financial sector. The Net Zero Banking Alliance is part of a wider group of alliances called the Glasgow Financial Alliance for Net Zero, which is led by Mark Carney and Michael Bloomberg, which seeks to bring the finance sector together. Many may have heard of Mike Carney's announcement at COP26 that the alliances collectively represented 130 trillion of capital to deploy towards net zero. And it's a lot of money. But the risk is that you push activities outside of that rather than enabling that transition. The second, I think, is that we're in a very transparent operating environment in which there are many people watching what the finance sector and individual actors do. And we may not move fast enough for everyone. And so it takes leadership, it takes intent to come out and make these commitments and to follow through on them, which again takes me back to the point about disclosures, to show how you're progressing on there. The capital gap is significant. I touched on that a little above. There is not enough capital at the moment flowing towards net zero activities, and we need to scale that up enormously. And again, that's something that we're working on at both NZBA and GFAN's level, but which is fundamentally enabled by the activities of governments, regulators, and standard setters to require climate disclosures from listed companies, to put in place the economic frameworks for the decarbonisation of sectors according to the climate science, and therefore to show those first steps to companies so that they can then take those into their strategies and into their business models. And then the last, as I say, is this is a collective endeavour. It requires effort from everyone to help us achieve those climate goals. We're quite pleased. Standard Chartered operates in 59 markets across Asia, Africa, and the Middle East. At the start of COP26, 20 of our footprint markets have set net zero aligned commitments at governmental level. As we came out of COP26, that's increased to 33. That's fantastic, but there's still 26 to go. And so again, this effort that needs to be shared with each playing their part, governments sending the signals and setting the policies, the private sector responding to those, and the finance sector sitting there with the expertise and the capital in order to enable those.
Thank you, Simon. So you talked about the Net Zero Banking Alliance per se, which was launched earlier this year with 40-ish signatories and now growing to 95 banks in there. What would you say are the main goals of this alliance?
So we've really, really enjoyed the partnership with BCG that's enabled us to create our net zero plans and to create our transition finance framework. I hope you won't mind me saying that not everybody has the opportunity to draw on resources like that. So really, to my mind, NZBA is a safe space for all banks to come together to think about the initial steps on a net zero roadmap. So we have the commitment text. If you want to join the Net Zero Banking Alliance, that needs to be signed at CEO level. And it has some key conditions around the scenarios, for example, that you might be using when you model how you get to net zero. So it's trying to create a standardized approach that is credible to all stakeholders. But signing the document is the first step. The far more important one to my mind is this peer community we now have of 95 banks working together, thinking about the resources they need. The Standard Chartered shouldn't need to develop its own transition finance framework. We may do because of the specifics of our markets, but it's super helpful if there is a fundamental document there that sets out what this is, something like a principles for transition finance. And so it's these challenges to my mind, that the NZBA should be working on. How do we help take that commitment text to a consistent level of implementation across our different banking members? And then how do we then allow them to hand off, whether to their own internal efforts, to partnerships with third parties like the ones we have with yourselves and Baringa, to be able to take those to the next step in terms of execution, because the strategies and business models of every bank are different. And then that again provides an accountability framework. How are we showing how both banks within the Net Zero Banking Alliance and then also the overall Glasgow Financial Alliance for Net Zero is progressing towards those net zero goals? The 130 trillion, are we moving it at the right pace and at the right level of ambition? So really that peer community and that standardization are to me the key things. The third then perhaps worth thinking about, because I spoke to it earlier, is how does the banking sector have and find a voice with the other stakeholders that it needs to work with? There is a sector piece there, but I don't think that's specific to banking. There is a governmental piece, also not necessarily specific to banking, but how do we ensure that we are in dialogue with all the stakeholders who will create that net zero operating environment that we're all striving for?
And Simon, you've said it implicitly, but it's worth being explicit. Who is able to join either the GFANZ or NZBA alliances, and what are the commitments once you join such an alliance?
Right. So GFANZ, the Glasgow Financial Alliance for Net Zero, is a coalition of alliances for banks, for insurers, for asset managers, for solutions providers within the financial institution space. So if you're operating in this space, there is an alliance for you, full of peers who share your ambition. For Net Zero Banking Alliance, as I've spoken to, the process is that a bank, and I should acknowledge here that the Secretariat for NZBA is operated by the UN, the United Nations, within the UN Environment Programme, would correspond with the Secretariat. You would express your interest, and the key thing is that CEO's signature on the commitment text that says, okay, at the top of the organization, you have endorsement for both committing to a net zero strategy as a result of joining NZBA and for striving to align to the NZBA requirements in that commitment document. So the process is similar for the other initiatives. And then it's about trying to be an active part of that. We have a range of working groups within the Net Zero Banking Alliance that are looking at the various different areas of implementation or the transition strategies for different sectors, or how we support outreach again to all the communities that I've just spoken. But at the heart, the effort here is to work to bring financed emissions, so those emissions of your clients and counterparties, on a science-based trajectory down to net zero by 2050. So, and to set interim targets as well there. In October, Standard Chartered released its net zero roadmap. I've referenced it before, but with things like a 63% reduction in the emissions from sectors, 33% for oil and gas and 30% for mining. So how are we looking at a range of sectors that for us represent around 2/3 of the emissions from our portfolio? How are we driving those by 2030 on that net zero trajectory? But as part of that, again, how are we fulfilling those NZBA requirements? So it's for other banks to come in and think about that, to set those 2030 targets within 18 months of joining, and then to keep revising them, partly because the climate science will continue to improve, but partly because the expectation is we will bring in a wider range of products. At the moment, this is mainly focused on balance sheet lending, but we know that there is work going on elsewhere within the space on facilitated emissions from capital markets activities. And then to keep using things like Task Force on Climate-related Financial Disclosures, as Standard Chartered does, to show that progress, to share that with your communities and to use that accountability mechanism. And then perhaps just as a last piece, it's given Standard Chartered has recently sort of concluded chairing the Task Force on Scaling Voluntary Carbon Markets. One of the things that we're working with the Net Zero Banking Alliance on is the role of carbon credits as we think about that journey to net zero. So how do we recognize those companies who are not just mitigating their underlying emissions, but they are compensating for the residual emissions on their journey to net zero?
Thank you, Simon, and thank you for going back to Standard Chartered, which is a great example of a bank with a strong commitment towards net zero. In fact, net zero is incorporated into your annual group scorecard, supporting shared action and sponsored by the management team and the CEO directly, as you were saying previously, to demonstrate accountability at the highest level. Could you Could you share or describe briefly, you spoke to it a bit, but the bank's approach to net zero and specifically elements that you think can be of relevance to other banks, say Greek banks in the audience we have today? What could you share from that experience with Stanchart?
Thank you. And I think you hit many of the key points for me. So from our perspective, we committed in the spring of this year. We had a long-standing commitment to Paris alignment, which we've been pursuing since 2017 for our financed emissions. So beyond those that we control from our branches and our offices, in the spring of this year, we said that we would develop our net zero commitment. We made that commitment public. We put it into our group scorecard. So that drives the remuneration, the pay for pretty much everyone across the bank. So showing that it's a shared endeavor. We put it in the long-term incentive plan, which drives the pay for the very most senior individuals in the organization. So showing it matters at that level as well. And we embarked on this quite public process, consulting with our stakeholders, working with specialists like yourselves as we developed our plan. We baselined the emissions in our portfolio so that we had a sense of what we were dealing with, and in particular, where we should start setting targets. We selected those sectors that I've mentioned, oil and gas, metals and mining, power, as some of the sectors where we thought they represented the highest levels of emissions in the portfolio, so around 2/3 of the emissions that we baselined. And then we set the targets, and we set those targets in accordance with the Net Zero Banking Alliance guidance, and also with some of the great work that's being done by the Science Based Targets Initiative, according to the emissions reduction trajectories in the IEA's Net Zero 2050 scenario. So thinking specifically to our footprint across Asia, Africa, and the Middle East, what sort of reduction trajectory did we need from that? And as I said at the beginning, also how do we enable capital flows there? How do we think about things like the transition finance framework to be able to show the activities that we think form a critical part of net zero? And all of this, again, still coming into the group scorecard, the long-term incentive plan, the way that we reward and incentivize our people in the coming years. Overseen by Net Zero Steering Committee, which is run by a member of our group management team, our executive committee, and I think keeps growing over time, because as we keep working to implement this, as we keep working to extend this, but we find more and more parts of the organization who need to be part of that journey. A lot of this first phase was focused on our corporate bank, but there's a very big role for the consumer bank to play as well here. How do we think about emerging areas like mortgages and how we can help our residential customers lead greener lives, and in particular, live in greener buildings? So the different dimensions of this, but really, how do you understand your emissions today? How do you target where you want to reduce? How do you use the scenarios to guide those? And then how do you drive the behaviors across the organization in support of those outcomes? And then transparency, of course. How do you tell everyone how you're getting on with this, which is where, for about the 5th time, I'm afraid, the Task Force on Climate-Related Financial Disclosures is such a critical component for us.
Thank you very much, Simon, for this comprehensive overview. Just to recap, we need to complete a global transition to net zero carbon emissions by 2050. It might sound very far, but in reality, it should start really now, because the scale of the challenge is such that rapid action and significant investment is needed. And that's where banks have an important role to play. Many banks have made net zero commitments in recent years. What is now needed is clarity on the how, and start doing and acting on things concretely to build their own net zero strategies and materialize their plans. The Net Zero Banking Alliance is definitely a strong ally in this journey. As more banks mature their sustainability strategies, we anticipate further participation in the Net Zero Banking Alliance. In that sense, I would hope to see more Greek banks join in the Net Zero pledge. Simon, it has been a great pleasure having you with us today. Thank you so much for joining, and thank you, Mr. President, for having us with you in this great event.